And last but obviously not the least to report, we've got Nvidia, the AI chip giant with a market cap greater than $3 trillion, will close out the Magnificent Seven, reporting towards the end of November. Joining us for more, we've got Toshiya Hari. He is Goldman Sachs head of U.S. Semiconductor Research, and he holds a buy rating on Nvidia. Toshiya, it's always great to speak with you because you have such great insights into Nvidia. I know that you recently met with Jensen Huang. You also had him speaking at the Goldman Tech Conference earlier this year. What is the biggest thing that you learned from those conversations that is going to impact your thinking heading into Nvidia's print?
Of course. Thank you so much for having me, Madison. You're right. We did have Jensen attend our conference in early September. We were also on the road with him and the rest of the team very recently. Look, there are a couple of things. First, in terms of the demand profile out there, the environment continues to be very robust. If there's a problem, it's a supply problem, not a demand problem. You've got the large hyperscalers, which we will hear from next week from a couple of them. They're still in the early stages of the build out from an AI infrastructure perspective. The customer profile is broadening beyond the hyperscalers into enterprises and also sovereign states. So there is demand across the board there. Secondly, I think there's been this perception historically that NVIDIA is very strong in training, yet their competitive position could potentially dilute as we transition to inference. As you look at the most recent models that have come out from OpenAI, the complexity from an inference workload perspective is going up, has gone up. And as that proliferates to other models, we think that will only grow NVIDIA's growth opportunity set and potentially expand the competitive moat that they have. So again, demand very strong, competitive moat very sustainable.
Over the past few years, Nvidia has experienced one of the best runs for investors. Its domination, however, has persisted for a lot longer. Over the past 10 years, Nvidia and its industry-leading GPUs, graphics processing units, have provided investors with performance that is almost unmatched. If you bought a sizable portion of its stock 10 years ago and never sold, you're probably a millionaire. Since Nvidia's circumstances might not be as exceptional as you may believe, I believe investors can also learn a few important lessons from the company's stock. This is the current value of your first investment in Nvidia stock if you made a $4,000 investment 10 years ago. Many investors could be regretting not purchasing the stock 10 years ago after witnessing such an incredible run in just 10 years. But that's not the right perspective. Nvidia is special, but equities that experience extraordinary surges are not. These stocks are unusual because there are typically only a few corporations that do it every 10 years. Finding them and sticking with them through all the ups and downs is the hardest part. For investors in Nvidia, the journey wasn't entirely smooth, beginning with the downs. Nvidia saw 2 times in the last 10 years where its value dropped by more than half. The percentage off its most recent peak is displayed in the chart below, which aids in illuminating the depths of different drawdowns. Investors most recently had to cope with a 66% drop that wiped out all of the returns from 2020 in late 2022. Therefore, if investors want to profit from these long-term winners, they need be aware that there will probably be significant declines that make selling look like the only option. Investors must, however, consider if the present problem will keep the stock declining in 5 years. It could be time to think about selling if the response is yes. If not, you'll need to exercise patience and disregard what the rest of the market is doing. The only way to hold a stock long enough to see $4,000 turn into $1 million is to do this. But it's not an easy one. Unfortunately, finding businesses with this kind of potential is much more difficult than purchasing and owning. The most important factor I consider when searching for businesses with enormous potential is broad market appeal. In essence, does this business have a product that has the potential to impact almost everyone on the planet? Given that the general public uses their products and has changed how people behave, this way of thinking would have attracted massive winners like Amazon and Alphabet. Regretfully, Nvidia was overlooked by this group. Given that its main offering is the GPU, which was initially created to process visuals for video games, investors may have been excused for failing to understand the wider picture. For jobs like training artificial intelligence, AI, models, or engineering simulations, data centers can benefit from the amazing hardware known as GPUs, which can conduct several calculations in parallel. The latter is what led to Nvidia's most recent run, and many investors anticipated this pattern. Therefore, Nvidia may have been identified as a stock with a significant upside because it is creating a product that may eventually have an impact on the mass market. There were indications, though I'm not claiming it would have been clear 10 years ago. These screens can be used by investors to find businesses that could change how people live and conduct business. The best course of action is to stick with it through the highs and lows if you find one. What is holding it back now could not matter in 5 years. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Toshi, it sounds like you're saying that any concern almost of the fact that Nvidia could be slightly losing their dominance, or the fact that some of these smaller players are gaining maybe more of a competitive edge, or better able to compete with Nvidia. It doesn't sound like that's worrying you at all.
It's something to definitely keep in mind and to be cognizant of. And there are a handful of startups that are making really good progress. There are other merchant companies as well that compete effectively with Nvidia. But when you think about Nvidia's ability to really innovate across multiple components, if you will, it's not just the GPU. They've got their internally designed CPU, the Grace CPU. They've got NVLink, which is a switch that essentially connects multiple GPUs. They've got Ethernet connectivity. They have InfiniBand connectivity, and obviously they have a very broad suite of software that augments their hardware capability. So when you think about their breadth and their ability to innovate at a 12, 18-month cadence, I think it's going to be very difficult, very challenging, and expensive for others to compete head-to-head with Nvidia.
I want to get your response, Toshia, from two things that analysts we've spoken with have called out in a somewhat bearish case on Nvidia, though you can't really be bearish on Nvidia right now. But they've talked about the potential competitors, something like a Cerebras, for example. They've also talked about the potential slowdown in demand if we do have a macro challenge moving forward. Which of those two do you think is more likely, or do you think that neither one is actually going to be that big of a headwind for Nvidia?
Yeah, it's a great question. Between those two, Madison, I would say the latter probably comes up more and more in our conversations with investors. Again, I don't think the company is complacent in any way. They are very paranoid when it comes to competition. But again, the bigger debate is really how to think about sustainability of demand going forward. The majority of investors, we believe, are.
In general, Wall Street believes that two of the businesses most positioned to gain from artificial intelligence are Nvidia and Alphabet. However, some analysts have set very optimistic price forecasts for the equities. Beth Kendick, an analyst at the I/O Fund, predicts that as the market for AI accelerators grows, Nvidia will be valued at $10 trillion by 2030. According to that prediction, the present market value of $3.3 trillion would increase by around 200%. Additionally, it suggests a share price of about $405. Trefis analysts predict that by 2030, Alphabet's stock price might reach $500 as Waymo, its autonomous driving unit, grows in importance inside the company. From its current share price of $172, the forecast suggests an upside of around 190%. Additionally, it suggests a market value of about $6 trillion. Forecasts should always be viewed with suspicion by investors. However, both Nvidia and Alphabet are worth looking into more because they are unquestionably significant participants in the rapidly growing artificial intelligence field. These are the key points. In the field of accelerated computing, which uses specialized hardware and software to speed up complicated data center workloads like artificial intelligence, AI, NVIDIA graphics processing units, GPUs, are the industry standard. In addition to being the fastest accelerators available, NVIDIA GPUs come with a more complete set of software development tools. As a result, the company holds over 80% of the market for AI chips and 98% of data center GPU shipments. So what implications does this have for Nvidia stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
I want to get your response, Toshia, from two things that analysts we've spoken with have called out in a somewhat bearish case on Nvidia, though you can't really be bearish on Nvidia right now. But they've talked about the potential competitors, something like a Cerebras, for example. They've also talked about the potential slowdown in demand if we do have a macro challenge moving forward. Which of those two do you think is more likely, or do you think that neither one is actually going to be that big of a headwind for Nvidia?
Yeah, it's a great question. Between those two, Madison, I would say the latter probably comes up more and more in our conversations with investors. Again, I don't think the company is complacent in any way. They are very paranoid when it comes to competition. But again, the bigger debate is really how to think about sustainability of demand going forward. The majority of investors, we believe, are fairly comfortable with the outlook going into calendar 25. The big question mark is calendar 26. To the extent CapEx continues to go up at the hyperscalers, potentially negatively impacting their gross margins, their free cash flow, what does that mean for 26 and beyond? So between those two, Madison, I would be a little bit more concerned about the latter. But again, at this point, we remain pretty positive on the stock and on the trajectory going forward.
Talk to me about what you've heard from those hyperscalers about their CapEx when it comes to Nvidia. There's been this big question about whether or not we're going to see a return on that investment from hyperscalers. What are you hearing about that?
As of now, Madison, I think, again, as a group, as a cohort, the hyperscalers are very much in build mode. Our colleagues' capital spending estimates for calendar 25, the bottoms up number is suggesting sort of mid-teens to high teens growth. We do think, based on what we're hearing from customers and partners and the supply chain in Asia, there's probably more upside risk to those numbers. So again, we'll find out as we progress through next week and a couple of the big customers report. We do think there's potential upside there. Again, the big debate is not so much calendar 25, it's really calendar 26. At this point, it's very difficult to prove or disprove where things are headed beyond 25. To the extent we're sitting here in 6-12 months and the monetization is not there, the ROI is underwhelming, increasingly we would potentially become a little bit more worried about not just Nvidia, but the companies that really make up the ecosystem from an AI infrastructure perspective. But at this point, again, we remain very constructive.
So Toshia, what does that tell us about where the stock's headed? I'm guessing it's headed higher in your view, and you see new all-time highs on the horizon.
That's right. We do expect upside from here. When we compare and contrast how we're thinking about the 25 earnings profile, the margin profile for the company relative to street consensus, we're modeling about $4.65, give or take, in EPS for calendar 25. As of this morning, I believe we're about 15% above street consensus. So, again, we have about a month left until the company reports. But as we progress through earnings season, we hear from the hyperscalers, we hear from Nvidia in a month's time. We would expect street numbers to move up and for that to drive the stock higher as well.
All right, Toshia Hari, Goldman Sachs Managing Director, thanks so much for taking the time to join us.
With new hardware products like the Grace CPU and networking solutions, Nvidia has further solidified its position as a pioneer in accelerated computing. In actuality, Nvidia dominates the AI networking business. In the second quarter of fiscal 2025, which concluded in July 2024, Nvidia announced impressive financial results. Non-GAAP earnings increased 152% to $0.68 per diluted share, while revenue increased 122% to $30 billion. With the upcoming release of its next-generation Blackwell GPU, which is already sold out for a full year, Nvidia will have a significant catalyst in the near future. Beyond that, Nvidia believes that physical AI and humanoid robotics present a growing opportunity. To put it another way, physical AI can comprehend, navigate, and interact with the physical environment, while generative AI can produce words and images. According to Straits Research, Nvidia is in a strong position to profit from the projected 34% annual growth in the humanoid robot market through 2032. The business offers goods that cover each level of the robotics computer stack. Its Jetson embedded systems give robots the onboard computing capacity they require to make decisions. Its DGX systems offer supercomputing infrastructure for model training. And its Isaac platform offers development tools for creating and testing robotics applications. Over the next 3 years, Wall Street anticipates a 35% annual increase in Nvidia's earnings. Because of this, the present price of 63.5 times earnings appears to be fair. Even though I don't think its market value will reach $10 trillion by 2030, patient investors should still feel free to purchase a tiny stake now. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community. Don't miss out on crucial updates that could impact your investment decisions.